All right, folks, and welcome to the Understanding and Strategizing Risk-Based Audit Days in IATF 16949. My name is Jeremy Hazel. I'm with Plexus International. And today what we're going to do is we're going to be taking you through a very brief introduction to what risk-based audit days are, how they're going to impact you, and lastly, I'm going to give you some ideas and some thoughts in terms of how you can strategize to make sure that you are not adversely affected by this new rule arbitrarily. So let's go ahead and start the presentation here. I'm going to go ahead and share my screen. And the first thing that we're going to do here is we're going to look into the takeaways, because I firmly believe that knowing where you are going is key to you participating into the journey. So the first thing we're going to do, we're going to look at the new sanctioned interpretations released to the rules 5th edition that allows for additional time to tier 1 organizations to be added to your audit based on your performance. So the first big takeaway is that if you deal with tier 1 folks, or you are a tier 1 folk and you supply to the OEM, this will apply to you. Now I'm going to prove that out in the next slides. I do have where you go to get the facts, because it's not okay for me to just share up here, this is what it is, without showing you where to go to get it. The second big takeaway that you need to understand is the data on your performance must now be given to the certification bodies 3 months ahead of time. So your certification bodies have always gotten a packet that had your performance in it, but now the time is very specific and they'll be looking at your OEM customers. Now, this additional time is going to be estimated on the number of OEMs that you currently service that you are not meeting the performance requirements to. Obviously, the more OEMs, the more time. Rocket science. Now, when we get into the consultation strategizing style part, at a very high level, I'm going to be talking to you a little bit about your metrics and your systems, because your performance is largely going to be aligned by how you are reporting your performance and how that performance reporting system, how, say, full it is in terms of integrity. A performance measurement system with poor integrity will not yield you positive results. So we're going to be talking about that in step 4. Now, the 5th thing that we're going to talk in terms of strategizing, the auditors that are in your internal auditing program need to be capable of taking local action to address the issues in the measurement process. Now, we'll talk a little bit more about that when we get to the strategizing part. And the metrics need to be monitored and escalated early. So these 6 things will be the takeaway for the brief time that you and I are going to spend together. I wanted to get those takeaways out so that you understood exactly where we were going right from the jump. Now, the IATF update. What I have up here on the screen is the IATF update. This is directly off from the IATF website, dated February 3rd, 2021. And you'll see that there is a new communication. What I've got down here in the red, let's go ahead and annotate this. Notice here, the IATF has approved additional Rules 5th sanctioned interpretations, which define the method to implement the concept of increased time if your performance is not working. Now, as an IATF stakeholder, what does this change mean? So notice here, the IATF recognized certification bodies will need to request from their certified clients with IATF OEM customers. Okay, that is a huge designation. So if you are tier 2, tier 3, tier nth, this is not for you. Now, will this inevitably probably come down the pipe? Absolutely. But this is for your tier 1s that are supplying to OEM-based customers. And what they're going to tell you is your customers with subscribing OEMs need to provide the performance 3 months in advance. So Where do you go to get this once you're on the IATF website? Right there, the IATF stakeholder communication and your SIs. Now let's take a look at how this works real fast. When we dig in to the sanctioned interpretations, so this is where the rubber meets the road, notice here in blue, when the client does not meet the IATF OEM quality and or delivery targets, the certification body shall increase the total audit days. Okay, now how is this calculated? They gave you a handy dandy table. So literally it is the number of employees and the number of your IATF OEMs. So literally, if you have less than 500 employees and you have 3 or more IATF OEMs, they're going to add 6 hours to help you out. Notice that I say help you out in the term that we all know how the help comes. Now, the other thing that I want to cover here for just a moment, notice that in this blue text here, the increased audit time shall be used to review corrective actions associated with these OEM quality and delivery targets and the risks to similar processes or products. So they are not going to assign this arbitrarily and hope that they hit something. They're going to be looking at this as a targeted push toward those items that are eating those OEMs' lunches. So you really want to pay attention to where they're going. Now, there is an exception, so stay with me here. The only exception is if the client can provide evidence of effective implementation for the corrective actions for that quality and or delivery performance issue. In this case, no increase is applied. So this is kind of how it works. And now notice what this applies to. You have to have some IATF subscribing OEMs. You have to be failing in the quality delivery area with them. Then, if you can prove evidence of the corrective action, closure, and implementation of this, you can then avoid this uptick. So the certification bodies now are going to go through and they're going to place it into their planning. So let me show you for certification bodies what's going on this other side. What you'll see here is from the rules fifth, there's been a little bit of augmentation. Notice here, did the client provide the latest IATF reports and or scorecards showing the status of quality and delivery performance? And right here, were the IATF OEM's objectives and targets met? So what they've done here is they've added in a couple different things into the planning, and they've definitely got their eye on the quality and delivery targets relating to the OEM. So the whole thing about risk-based audit days, and this is actually a good thing, they're trying to place the risk-based audit days in the suppliers, let's say, that pose the most risk to the OEMs. And I think that largely we can agree that that is a good thing. Now, notice there is no corresponding table for reduction based on acceptable performance. That's a tale for another time. But from a risk-based audit day perspective, this is really all you need to know. You now know which SI it is. You now know where to go to get it. You know whether or not it applies to you. You know when it doesn't apply to you. And now you can deal with it and kind of move forward. Now, the second part of this thing, and this is something that I want you to think about. I'm going to go ahead and stop my share here for a second. If you are looking at risk-based audit days and you are dealing with an OEM, they all have their own way to define and produce their metrics. So metric discrepancies will play a significant role in the application of these audit days. And what I'd like to do for those that may be impacted like this is one thing that I want you to think about. So what I'm going to do here, I'm going to go ahead and share my screen for a second, and I'm going to bring you to a tool that routinely we take for granted in manufacturing, but you may not think about when it comes to business metric management. Okay. So let's talk measurement systems analysis for a second. Being automotive folks, we know largely what MSA is trying to do, right? Measurement, systems, analysis. Now, what this is, let's say that we make 1,000,000 parts. This is what we observe when we make the 1,000,000 parts. All of these observations. And what we observe is an addition of what the process is actually doing. So the observation is a mix of the variation in the process plus the way that we measure. So what the process is doing plus error in the way we measure creates what we see. And when you have high measurement error, let's say 40%, you can't trust what you observe because a majority of what you're seeing is flawed by the way that you are measuring it. So you really can't identify the true process variation. Now, how does this work in risk-based audit days? When we look at metrics, let's take a look real fast at metrics such as scrap, okay? And PPM, by the way, is the same thing. When it comes to scrap, let's say that I go out there and I have 10 parts of scrap. And on a good day, we can count to 10. Most of us can. But now, if I go to the operator and I ask them how many parts are scrap, they're going to say 8. Well, why? Because 2 of them are startup. And then I go to engineering and I ask how many are scrap. And they're going to tell me 5 because 2 of them are startup and 3 of them are reworkable. And then I'm going to go to management and they're going to say 2. Well, because 2 of them are startup, 3 of them are reworkable, and the third and fourth one there we can put down into regrind. Which definition of scrap is correct? All of them. Which one's wrong? All of them. The way that we measure scrap, there is so much variation in the way that we measure that we cannot tell whether or not we actually have high scrap or low scrap. So the same thing is true with performance metrics. Business performance metrics need very low measurement variability. Let me give you a real life example for a moment. We were dealing with an OEM and they wanted us to sign up to consignment. We chose not to sign up to their consignment program, and in exchange, our delivery was brought down to 70%. Now, on our scorecard, that made our delivery abysmal, but it was due to a commercial discussion that we were unwilling to accept or sign up to. So, when you're going into risk based audit days, the important thing to know when it comes to your metrics: how are your metrics derived? What is driving the metric? And most importantly, you want metrics with a low amount of variation so that when that time comes and your certification body is reviewing your performance, you, one, can tell your story if there is no resolution. And secondly, you know where they're going so that you know where to work. The other thing that I'm going to say strategize wise, when you audit your system in preparation for a certification audit, make sure that your auditors are auditing from the same perspective. They are following performance-based audit trails. And when it comes to authorization of those auditors, an auditor that can highlight something but cannot take a local action to correct it is largely going to be ineffective at the plant level as a first party. So when you are strategizing the selection of auditors, you want to make sure that the auditors you select are capable and authorized to take the local action for that closure. That's a big deal because if they're not and they highlight it, information without action doesn't do you a tremendous amount of good. So if your auditors are not authorized to mobilize your teams to take the action you need to take, the risk-based audit days will come back up and bite you. And lastly, when we're looking at risk-based audit days, one of the things that you want to pay attention to, and let's go ahead and come back to our 6 things we were going to get today, just so that we can begin and end in the same place. The metric monitoring system that you are currently engaging in, and I'm down here on item 6, needs to be monitored and escalated early. Many of us only go through audits every 6 months, let's say, to 1 year. And so if you are waiting 5 months to take action on a discrepancy, generally speaking, actions do not move that quickly. So when you look at metrics, frequent monitoring with earlier detection and escalation is one of those things from a strategy standpoint that will help you in risk-based audit days. One of the reasons why I wanted to do this webinar on risk-based audit days, we could all go out to the sanction interpretations. We could all read them for ourselves, but a lot of us don't know necessarily how we will go about reacting to this, nor what it means for us. So what I wanted to do at the end of this is give you 3 firm strategy steps. The first one, make sure your MSA is straight on your business management metrics. The second one, make sure your auditors have the correct authority to take action once a discrepancy is found. And the third one, make sure that your issues are escalated and monitored at a level that allows you to take the action. So hopefully you've got 3 things now to do that, 3 things to kind of get ahead of this, and you know a little bit about what's coming down the pipe. All right, folks, that's it for me at Plexus. So on behalf of Plexus International, thank you so much for taking the webinar with us, and we'll see you in the next one.